All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Starting off just a couple minutes early here. Lots to look at. Lots to take a gander at here, and especially after yesterday. And let me pull up the market here. Yesterday, we saw one of the biggest drops. One of the bigger drops that we've seen in a long time. We could say, oh, the biggest drop of the year. Well, of course. Keep in mind we're about 1.2% on the drop yesterday, percentage wise. One of the things that was different about 2013 in that year relative to 2012, 2011, 2010 is in 2013 we saw some of these rough days for the market kind of turn and go the other way where after one rough day we could see a big bounce and see things kind of buyer step back in very very quickly. Case in point, right here in November, okay, where we get the hard sell, and the next day all the selling gets erased. Okay, now that's what 2012 kind of or 2013 kind of seemed like, but in reality that wasn't always the case. We'd have hard sell followed by hard sell on occasion where the market would drop considerably here. Volumes were pretty elevated yesterday. It was a pretty broad-based sell-off overall, but clearly led by energy. Clearly led by energy was weak in the morning, even when the market was up, and it was one that rolled over the hardest. Eventually, it took tech with it and some of the other groups, but overall, energy was the leader, was the catalyst, and we can kind of see why with what's going on with oil, with how oil continues to be under pressure, and oil continues to push lower. Now, one of the things that came out almost immediately as the market started to dive yesterday was a report by Costin over at Goldman Sachs, and basically talking about the market and PE ratios. Okay, keep in mind when we look at the market, we're setting up trades. We're looking at the technicals, right? We're looking at the technicals. We're trying to find patterns. We're saying, hey, you know what? This is in a safe spot, or this one the risk is higher, and so we kind of get in with the technicals to manage some risk reward. But when it comes to the broader market and where the broader market and how the broader market's moving, it's generally fundamental. And one of the biggest fundamental factors out there are PE ratios. And these are always going to be talked about more and more around earnings. But basically, a PE ratio is they take the price of the stock and they divide it by the earnings per share. Okay, it's a very simple metric. It's one that's been around for forever. Okay, well, this Goldman comes out and says that the stock market valuation is lofty by almost any measure. Okay, and then in his report, he goes on to talk about how where the current PE ratios are, and basically comes out and says after a surge higher in stocks in 2013, doesn't see a widening to 17 or 18 on the PE ratios as many investors expect. Okay, currently we're down just under 16, depending on how you look at it. But what basically the concept here is the bulls argue that even with the market staying on its current earnings trajectory for 2014, okay, the bulls argue the market can go up. The bulls say, hey, if earnings stay how they've been, the market could continue to go higher because investors are going to be willing to put more money into stocks and bump up these PE ratios. Okay? Where the bears argue and say, well, wait a minute. How are we going to expect PE ratios to move up into the 17, 18, 19 area from a market standpoint if earnings aren't growing, if we're not seeing a fundamental growth in earnings? So really all of this comes down to, and even the price target that Costin puts on the market, okay, and the different things he talks about, he gets into some treasury yields and things like that. I'll throw this onto the chat for those of you interested in going through it. But it really comes down to earnings. Earnings are the battle right here. Earnings are what are being talked about. It's what the market is hinging on. And that's a very different market than we had from 2008 to 2012, where it was hinged on not necessarily earnings, but hey, what's going on in Europe? Okay, U.S. government debt, financials. It was based on a lot of macro factors. Where here we're finally getting a market that's back to normal in the sense of, hey, they're arguing earnings, and if this is the argument, if this is what's causing buys and sells in the market, then we can expect for a market that, yeah, may not have a lot of upside to it, but becomes much more of a stock picker's market. Okay? It becomes much more of a market where it's important to understand what the PE ratio and what the growth rate is on your stock. Okay? For example, Boeing, this kind of forward PE and this earnings per share next year, and really looking and seeing, okay, which stocks kind of have this improving or this improvement going on with them during this earnings period over the next 3 weeks. Okay, so this is going to be it's getting to be a very different market. Yeah, Jimmy, especially for those that have never traded a quote unquote normalized market. Okay, it's getting back to '06, getting back to '05, and some of the things that were very similar back there, and that's what a lot of the arguments are kind of coming to bear, especially when we look at the broader market. Okay, look, even after yesterday's sell-off, okay, and this is one of the things that's a little bit frustrating for bears, those that want to play short, is most everything still has a strong upward trend, including the market. Okay, still has a strong upward trend. Okay, but we're dealing with negative divergences out of some momentum oscillators like the MACD. We're dealing with breakdowns of the 7 of the 20-day moving averages. We're dealing with breakdowns of some of the supposedly leadership sectors like energy. Okay. Small caps are holding in there okay. They held in with the market yesterday. They kind of, yes, they underperformed small caps slightly, but it wasn't this egregious underperformance by the small caps. Okay. So for the bears, the frustrating thing is, hey, you're still dealing with major uptrends. We're still dealing with higher highs and higher lows. For the bulls, it's like, okay, well, what's this pullback like? Okay. Look, normal pullbacks. What are normal pullbacks? Well, normal pullbacks generally are classified as such. A shallow pullback, okay, be 1 to 2%. Okay, that's a shallow pullback. Okay. A more normal pullback. Okay, a more normal pullback, normal kind of correction is 3 to 5%. Okay. And then when we get a kind of a strong pullback, you're generally dealing in the 7 to 10% range. Okay. Then they define a bear market as a 20% drop. Okay, which by the time you get to 20% drop, it's pretty obvious you're in a bear market, right? So if we look at this, what is the pullback on the market? Well, we're still in the shallow pullback range. Okay, we're still in the shallow pullback range. To come back down to the lower Bollinger on the market itself, on either the small caps or the large caps, we're talking about a more normalized pullback, and that would kind of fit into the normal category. Okay, so there's definitely some downside potential that's still left in this market, and typically after days like yesterday, we are going to see the market go lower. Doesn't necessarily mean the next day, doesn't necessarily mean every stock, but typically that's what we've seen. Now, is this market strong enough to kind of shake off yesterday and move higher? I'm not going to give it that much credit yet. Just simply because we haven't had enough companies come out with earnings. Okay, basically this morning, who do we have? We have J.P. Morgan come out with earnings, and let me show you the minute charts on these, the pre-market charts. Okay, we have J.P. Morgan, okay, who's trading higher after initial boost lower on their earnings, and then we have Wells Fargo, which their earnings report was actually pretty good. They dropped, and they're only down slightly here. What I'm looking for is I'm looking for confidence in the banks. Okay, one of my favorite areas in this market to play on the upside are the banks. But even if the market corrects, these banks are they're gonna pull back naturally. Okay, but I want to see that Wells Fargo and J.P. Morgan give confidence to the general banking sector. If we see the banking sector hold in throughout this week, that tells me, okay, you know what, the buyers are still here. We can go higher. If we see these banks roll over pretty hard, it's going to be one of those markets where we could see some stronger pullbacks. Okay, so I think these banks, and not necessarily their earnings, and Josh will be talking about their earnings more today, but even the reaction to their earnings. Okay, in general, the earnings were about as expected overall. Not a ton of surprises, and we typically aren't going to get any major surprises out of the banks because of how regulated they are now. But I think their performance here today is going to be a big deal. The challenge. Okay, yesterday we got out of Boeing. Okay, yesterday morning we got out of Boeing. Why did we get out of Boeing? Well, market was gapping down. Boeing has seen a morning sell every day, and it was coming off of the upper Bollinger Band. We'd been in the trade long enough, wanted to capture it, and so we pulled it off. Boeing kind of fell a little bit into the close with the market, but you'll notice it did not fall with what the market fell overall. I am looking to get back into Boeing. Okay, I'd love to get back into Boeing. I think right now we're still just a little bit too early. It is down at this 141 mark that we were looking for, saying, okay, if we got down to about 141, be an interesting re-entry point. That all said here, I think what the market did yesterday kind of changes some of the risk on it just a little bit to where if we get down in the 139 area, 140 area, I think that would be a much safer pickup in regards to Boeing overall. Okay. All right, market's opening up here. Okay, and you'll see a lot of green on the board. Okay, in fact, the market's opening up with more green than red. Some of the things that got just taken out to the woodshed yesterday. Things like Tesoro, that was down 280 on its technical break. You can see a little bounce here. Okay, a little small little bounce here. That's what most of these rallies are looking like. Google would be an exception there. Apple, a little bit of an exception, and I'll go look at Apple here with you. As far as a trade entry for the challenge, okay, there are some things that I like, and I'll show you those here in just a second. I want to see where some of this is opening. I find it very interesting that AT&T is negative, Simon Property Group is negative. Those groups there. Very interested in Hershey. See if we get some sort of entry on it here today. You'll notice Qualcomm down. Qualcomm got downgraded here today. That basically takes Qualcomm and takes it down into the bottom support area, the lower Bollinger Band. Am I tempted to buy some Qualcomm here? Absolutely. But I want to see the market hold up just a little bit here first. Okay? And more specifically, some of the banks. Let's see here. Pepsi, okay. Nucor, interesting. It's green on a downgrade this morning. Okay. All right, let me talk specifically to some of these stocks. Let's start with Apple. Apple, as Carl mentioned here, was upgraded. A couple things with Apple. We saw Apple yesterday morning open up lower and reverse and go higher, and then kind of sustain some of that momentum until the market just got taken down. And once the market got taken down, some of these big gainers like the Apple yesterday and whatnot, they got taken out pretty good. Apple was upgraded this morning by Jefferies. They didn't upgrade their price target on Apple, but they upgraded some of their metrics in regards to Apple. That's giving Apple a little bit of a boost. So is the increase in tech futures overall. Can Apple be bought here? It can. It can, but you're looking at a 530 stop. Yesterday's bottom, where it kind of went down to 530 two times and snapped back up. That's kind of your stopping point here in regards to Apple. I would prefer to see Apple base out a little bit longer, just from a comfort standpoint to get in. But overall, yeah, can you get in? Sure, but 530 is kind of your stop point in regards to Apple, unless you're going to set up a trade that takes you through Apple's earnings overall. I mean, Apple here is like a lot of the stocks out there. And let me show you here. Apple, when we're talking about our forward PE, okay, we're talking about our forward PE, and we're talking about our growth next year. Okay, look, we're looking at about 10% growth next year, about an 11 forward PE. You could argue that Apple has cash on the books, so this is actually a very bullish measure, but they're relatively equal, and they've been relatively equal for a while now. Okay, they got into a bullish position late last year, or excuse me, kind of August, September last year. But they're kind of in this position now where, up, down, flip a coin. From a fundamental standpoint, they're not cheap, but they're not that expensive. We see this happen. We saw this come in yesterday into the market with stocks like Starbucks. Okay, whose growth and PE ratios have been pretty much in line overall. Okay, and then Starbucks kind of triggering a trend rider bear signal yesterday. Nike, same type of thing, where valuations, earnings versus growth, pretty on par. Not a lot of bullishness there. We're seeing the trend rider bear signal from yesterday. DuPont, same type of action. As those others. Huntsman is another one with that trend rider bear, and yeah, getting just a little bit of a gap. But we're talking about stocks that are fairly valued from a fundamental standpoint. So Starbucks, okay. Here's Starbucks. We're talking about a forward PE around 23 with growth around 20. Okay, that's about fairly valued. Okay, and what does this say? This just says for a lot of these stocks like the Starbucks that, yes, I am bullish on, I really need to wait until earnings and really understand how these dynamics shift to say, well, okay, Starbucks can go to 100, or to say, you know what, we got to pull back to 60 coming. Okay, and that's a very common theme in the market here today, with many stocks, especially after yesterday's sell-off. One of the other themes in the market today is upgrades and downgrades. Analysts hot and heavy here this morning. Okay, all over the place. We have upgrades on things like U.S. Steel, downgrades on things like Nucor. So same sector, one stock gets upgraded, one stock gets downgraded. Okay, AK Google. Google gapping up not because of an upgrade, but simply because of a deal that they made to acquire another company. Sorry, name slipping in my head right now. But gapping up, this is always a daunting chart after yesterday's kind of sell-off here with Google, now getting a gap up. I would probably agree with you there, AK, as far as the path of least resistance here with Google in the short term, especially after that news is lower. Don't think that news really adds much to Google's earnings power, and a lot of times news events that don't add to the earnings power, they're events that you don't get a whole lot from. Yeah, Jimmy, or Jake, yeah, sitting on a pot of cash, ready to work. Let's rock and roll. Yeah, me too. I am. I'm anxious to get into the next trade. I was anxious yesterday into the close. Just not any real setups that I found to be greatly intriguing. Part of that is because of the option values, how they shifted a little bit yesterday. Let me show you some of the ones that I'm watching for. Would potentially get in this morning. Okay, but so far, gonna let the first half hour play out. Let's talk about Chesapeake Energy, CHK. Chesapeake Energy has come back down to this $25 mark. Okay. And one of the things I'd like about Chesapeake Energy is take a look at the volume yesterday. Okay, we had some elevated volumes, and a lot of times elevated volumes will mark a top and or bottom. Okay, Chesapeake's had a very normalized, very kind of gentle slide lower ever since it broke the seven back here when we got out of the calls on it. Okay, and it's had this normalized push lower. Now pushing higher here today. The energy sector itself is a little bit oversold in the short term. We start to see Chesapeake, good sign for it gapping up here today. If we're able to see Chesapeake trade up into the 2560, 2570 range, I think we get a very nice entry, especially from a risk reward standpoint, to trade Chesapeake at least back up to 27. Okay. Another one that very intriguing to me. I don't know if I'll be able to get a play on it before earnings, but is IBM. And IBM was kind of one of these dogs of the Dow that we started seeing get bought up early instead of waiting till January to get bought. They bought it up late December. And, we've talked about IBM, and with IBM, the question is, what's its first pullback going to be like? Does it set a lower high? Okay, or does it set a higher low? Or does it set a lower low? Okay, I want to see some support come in on IBM around 180, 182. If we're able to kind of see some selling get down to there, even today, market decides it wants to roll a little bit, we get down in the 180 area. I find that to be very intriguing as far as, okay, this would be a logical spot based on retracements, based on some of the other technicals saying, okay, we should find support here around 180. Another one very intriguing to me is Johnson & Johnson. Okay, Johnson & Johnson pulled back yesterday, but not a whole lot. It had this beautiful uptick on good volume earlier this year. Okay, has been just kind of consolidating right back towards the 7-day moving average. This is one that kind of sets up with a good risk reward here with using 94 as a stopping point. My only concern with Johnson & Johnson here is, if the market gets hammered, does it go down into that 94? Is that a little bit too tight of a stop? But it is one of my favorite plays out there. If we got this trading above yesterday's highs, I think that'd be good confirmation that, hey, a chance to really push higher here with Johnson & Johnson. If you look at it from an hourly standpoint, you see how these hourly Bollinger Bands are contracting significantly. Okay, and you can kind of see where a break above 95 would be very nice confirmation of Johnson & Johnson going higher, and a very, very nice setup there. Okay, another one that I'm a big fan of here that haven't had a chance to get in yet. Okay, is Japan, EWJ. And this Japanese index here, okay, if we kind of bring this up, we can kind of see the consolidation overall, okay. Been looking for it to potentially break out. So far it hasn't, right? So far it's kind of breaking down a little bit. Are we able to pick it up down here into support down here around 1170, or do we break up above 1220? Either one. Below, I'd love to be a buyer around 1170 or above 1210. I think this Japanese index is a very interesting one to keep an eye on as far as for an entry, but so far just hasn't given anything strong enough to say, hey, let's jump in there. And that kind of goes with Toyota. And one of my concerns with that Japanese index is Toyota's kind of broken down here. Okay. It's kind of broken down. I'd want to see a bottom come into Toyota here as well. Yeah, JD, Valero back to the 7. Yeah, let's talk about these refiners. They got hit pretty hard, right? And they're snapping back a little bit. Look, the one thing that yesterday did with Valero is it did not change Valero's trend. Okay, the trend is still strongly positive for Valero. It didn't create any big trend shift. Was there enough volume to say, yeah, maybe it's a top? Sure. Am I concerned that the MFI is above 80? Yeah. I mean, that's a pretty good overbought metric. We've had a lot of volume come into Valero recently. Is it probably near a top before earnings? Yeah, very well could be. And it becomes a very tough one for me to want to get into. But if you're looking to get into Valero, yesterday's lows are kind of where the stop stop is. I mean, we do have a bearish engulfing yesterday on some pretty good volume. But, we've had bearish candles on Valero on pretty good volume the whole time up, right? These bearish candles really haven't had a lot of follow through. So, overall Valero here, still in a strongly bullish position. But there are a few small danger signs in regards to volume and the overall price action. Now, Tesoro is my favorite in the group. Okay, JD, it's my favorite. And we talked Tesoro as far as what was one of the risks. In fact, when we were talking about pulling some off of Boeing, we were looking at getting into a little bit of Tesoro, but we were talking, you know what, the Boeing chart's just better. With Tesoro, we still have the risk of a breakdown happening. And we talked about the possibility of it breaking down and then snapping back and then resuming its upward trend. Right now, we have a clear breakdown. Okay, a very, very clear breakdown. Where does Tesoro go? Well, if we're going to retrace the whole rally here, we're talking around 52 to 50, okay, in the low 50s here. If we just slap on a retracement on the most recent rally, we're kind of coming down into a place where we could bounce, okay? So really what I'd love to see here with Tesoro is some sort of exhaustion with some sort of whipsaw back, some sort of candle like this right here, back here in August, where Tesoro gets sold hard and gets kind of a late day reversal and saying, all right, buyers are ready to step back in. Until then, I think some of the Tesoro momentum is going to be a little more painful to the downside before it gets a lot better there. Okay. Micron. Micron earnings gap down today, getting bid here this morning. Look, that Micron earnings report was fantastic. And Micron, from a fundamental standpoint, they have had enough growth to warrant the extreme increase in valuation of their stock. Okay, to be able to go from 12 to 24, or heck, it was $8 earlier in 2012, to kind of go to 2012. The action today on Micron, I don't see any problem in getting into Micron for those Micron bulls using 23 as a stop. Okay, using 23 as a stop there. Okay. SLW. SLW here, a miner, silver miner. These miners are showing bullish positions here overall. With some of their jumps. I'm struggling to really trust the miners overall, just because I don't really trust gold. We're in a environment where interest rates overall are rising. Is that potentially shifting? Sure. We've had interest rates fall significantly the last couple days, but overall, it's tough for me to want to trust these gold miners where they're at. All that said, you do have bullish signals that have come in. To see SLW bounce into the 23-24 area would be very logical there for SLW. Okay. Just looking at an email here. Boeing. Would I get back into Boeing? Yes, I would love to get back into Boeing. So far, the morning price action, love it. So far, it looks nice. Bouncing off this lower band here, it does look nice. I'm not as trusting of it just yet. One of the reasons why we decided to get out of that option yesterday was simply to take profit, and if we get back into Boeing, to be able to do a different option that's going to have a little bit more torque on it. Is that going to be Boeing? Potentially, but I still think we need to let this market play out this morning, given the overall action that occurred yesterday for stocks in general. Okay, I mentioned I'm very interested in the financials here today and what happens, and here we can see the financials gapped up. They've been sold into ever since, okay, and the more we see these rallies, these morning rallies get sold, the more dangerous this market becomes. And just take a look at something like the XLF from a price target standpoint. Yeah, could we find support here and go up? Yeah, we absolutely could. But most pullbacks, even during the bullish times of 2013, they've come down to the lower Bollinger Bands. Okay, so this XLF to say, well, it's got to hold up here and go higher. Well, fundamentally, these could be great, but there's still some selling that is very much potential or has a lot of potential there. Okay, look, my favorite financials, Bank of America. Bank of America, I'm not in it right now. I would like to, and I'm going to go through the Wells Fargo and J.P. Morgan earnings. I'm going to comb the details of those here today because I potentially would like to get into a Bank of America call trade ahead of earnings. Okay, ahead of earnings here. Yeah, Twitter. Twitter potential ABC Vegas. Yes, you do have this kind of ABC action going on here. Uh, how reliable are the technicals from a daily or weekly standpoint right now? Probably not much. I'd be a lot more trusting of an hourly or 15-minute and trading it with that. Overall, I do think Twitter's very interesting if it breaks 60. Last night in my notes, I wrote Twitter above 60, maybe time to potentially jump in. Okay. All right, now I've talked here of things that kind of looking at from an upside standpoint. Okay, and I do look a little bit more on the upside right here, just simply because of where the market is overall. But I think there's a great chance that this market falls into this breaks below 1800 on the S&P. I think I think the overall weakness that we have seen during this month of January, and if we don't have the bank earnings giving us a great kick higher, I think the risk of breaking 1800, which I think would be a real nice buy point overall, but I think the risk of breaking 1800 is elevated substantially. Are there any kind of downside trades? Any types of, hey, play the market lower to 1800? Well, you can buy VIX calls, okay. But one of the things I want you to keep in mind with the VIX is the VIX is not the VIX is not reacting. Even yesterday, it's not reacting as if the market's ready for a major sell-off. It's not reacting as if there's major fear here with the VIX. So we could even see the broader market go down another 30 points and break below 1800, and the VIX really not appreciate in value right here because there's not really a fundamental event. There's no geopolitical issue or anything like that out there that is major. Okay. Look, the energy group, if you're looking to get short, I would look for the bounces in the energy group here today and try to sell some of these bounces. Some of Chevron's not exactly bouncing yet, but some of these small bounces like the Exxon, and you're looking to play them down to the lower band. For those looking for short, can you get a little bit more out of the materials on the short side? I do think you can. Someone like CLF was upgraded this morning. U.S. Steel was upgraded this morning, and I think this is your biggest danger going after anything short. Is as these things pull back, I think we're going to see analysts that are eager to upgrade because they've missed big chunks from an analyst perspective. I think they'll be eager to upgrade. So I think even some of the best short charts out there, I think are quite difficult to play simply because of the earnings that are coming. Okay, we have lots of earnings coming, and because of the overall kind of upgrades that I suspect we will see. Yeah, Simon Property Group, Carl, or RM, excuse me. Twitter. Okay, yeah, Simon Property Group here. Look, commercial real estate, IYR. Okay, it got hit yesterday, but not much. And commercial real estate is a group that we talked about last week. Is hey, we may see this thing kind of get back into a mode of outperformance, where we start to see strong gains getting put in here. I'd love the reaction overall today, especially with something like Simon that opened negative and pushing positive. Simon, I don't really want to react to it here. My stop here on Simon is still about 153, still a little bit away. We still have contracting bands, but I do think Simon has some really good breakout potential. I also like Macerich, MAC. Is a little bit more retail focused, and Macerich breaking above 59.5, I think would be really nice. But I look at this entire sector, and it just, from a buy standpoint, just a little bit early. And it's kind of that same thing across the board. Even these home builders like KB Home. KB Home pulled back yesterday. We still have the bullish pattern going on overall, and I priced out the options. I'm looking, do I want to get in some KB Home? Nah, it's still just a little early. And that's kind of what it feels like with a lot of these things that I think have some good upside potential. Just feels a touch early. Just feels a touch early. Okay. All right, again for the challenge, okay. Some of the stocks that I'm watching, again, I believe each one of these are still a little bit early, so I'm not jumping in yet. But Johnson and Johnson, okay, Chesapeake Energy, okay, Chesapeake Energy, IBM. Would love to see IBM down $1.50 here today. Be able to go after it down $1.50, and the financials in general. And kind of seeing where they end up here today. I'd prefer to almost see them sell off just a little bit and then maybe stabilize after Bank of America. But these are kind of where I'm watching from the upside. Notice that every one of these, we're still trading below the sevens. Okay, I mean, if we go and take a look at the S&P 500, okay, and let me pull up the scan here. And I'm just looking for stocks that are right now are trading above their 7-day moving average. Okay, so these are S&P 500 stocks. We have 181 of them. Okay, 181 that are trading above their 7. Okay, that's what, 36, 37% trading above the 7. Okay, well, we got 63, 64% trading below the 7. What has been happening every day is we're seeing an erosion in this count. We're seeing more and more stocks on the S&P 500 trading below their 7s. And as long as this continues to erode, it's kind of a dangerous position. Okay, once we start to see this thing reverse and we start to see maybe one day where we get 100 stocks that make a mass migration from below to back above, I think that would be a very nice indication that it's a lot safer to step in on the bullish side and jump into some of these stocks. For now, it's just for this morning. Okay, still just a little early. Pepsi. Okay, you guys know I like Pepsi. I like trading Pepsi. It's been a very interesting consolidation here with Pepsi after it jumped up into this 84 area. I would be very interested in going after Pepsi above 83. Until then, I probably want to see a little bit more sell-off. I was kind of a little surprised we didn't see a little bit more bounce this morning on things like AT&T, things like Verizon. And I think the fact that we saw these things open higher and now going lower, I think that's just another warning sign that, hey, things want to sell off still more than they want to get bought. Okay, so my choice is, do I want to play some of these to the downside? Okay, and take a chance. We're still getting a little bit of ways from the 7-day moving average. We're dealing with the first week of earnings, which historically is a tough week to be short the market. You tend to get, shorts tend to get hammered the first 2 weeks of earnings. Okay, do I want to short some of these, or do I want to get long, into some of these that may have pulled back a little bit, like I've talked about? The long feels early. The short is probably the position to be in right here. But for the challenge, I'd rather kind of wait for a better setup. I mean, we could go after something like Nike, right, which got hammered yesterday, trading lower here today. But one of the things that's going to happen is we're going to see some sharp snapbacks. It's just at what level, okay? And so far, it looks like they're probably going lower before before next level. Yeah, Vegas. You say GDX. The gold miner is getting a bid. Yeah, and this is another. You could play in the gold area. Look, I find even the oil area very tempting here on this bounce here today. Oil broke 92 yesterday, rallied back above and trading up above 92, and I think even here on the USO, you can play for a stronger snapback rally with 33 as a stop. But again, kind of as a bottom picker. Okay. Alrighty. Yeah, Jake, ISRG. Every time I trade ISRG, I ask myself the same thing. ISRG is extremely volatile. To see the action that we've seen over the last 3 days, if you go back and look at its history, it's not exactly uncommon. ISRG doesn't trade a lot of shares. And when buys and sells come in, a lot of times they're on big block orders that really will move the stock in a big way. ISRG. I'm interested in their next earnings. Last year their earnings reports have been a bit lackluster. We got a little bit more than a week to go until they report earnings. It could be a very nice straddle type candidate around earnings. Because of how much it moves. I imagine there was probably some news on ISRG this morning, but I don't have that at my fingertips here with ISRG. St. Jude, take a look at St. Jude. This is one we've talked bullishly about for a while, but overall here, this candle on St. Jude yesterday, ugly as could be. You have a high volume gravestone doji after a major run. If I were looking to go out and get short, which, I may just go do one call, one put here for the challenge going forward. St. Jude is kind of one of those very interesting from a top picker standpoint. Yeah, Southwestern Energy. Yeah, a little bit of boost here. Something like Southwestern Energy overall. Look at the scale. You're talking about a 50-cent scale, so you're not talking about huge moves overall. Okay, but they can feel like it with the options. If we kind of zoom Southwestern Energy, which is a little more natural gas related, we're still trading below our 7-week moving average here. We're still in a consolidation mode overall. So it's a little tough here for me to want to enter there. But I could see why you would, and using 38 as kind of a stopping point would make some sense there. Tesla, yeah, Tesla broke down yesterday, and the biggest sign on Tesla, the breakdown, was it filling the shadow from Friday. It basically filled the shadow, broke down. I think Tesla, you got a little bit of support down here at 130, 132 area. If that breaks, if we see Tesla break 130, I think it could get real ugly real fast overall. All right. So in general, things like Allstate, things that have bounced just a little bit here this morning, Prudential, even Boeing, they're decent. Could you go pick them up, use yesterday's low as a stop? Sure. But overall, with what's going on here with the market, I think it may just be a little bit too early. I'd like to see a little bit more play out overall. Okay. One of my favorites out there is Hewlett Packard from an upside entry standpoint. I like Hewlett Packard. I like Qualcomm. They're kind of in the same area. I know we got out of Qualcomm yesterday as it died. It got downgraded here today. Can you enter it here today with a 72.40 stop? Sure. You can. I'd like to see a little bit more life. But both of these, Qualcomm finally breaks 74. Hewlett Packard, we start to see Hewlett Packard breaking above 29. I think we could see a lot of rotation into these stocks here overall. Marathon, yeah, Marathon here. This is Armand. It's kind of similar to SWN in its movement. in the fact that it rarely will close at its highs, rarely close at its lows. It does have a bigger range than Southwestern Energy. Your earning calls on it. I mean, you're talking about something that the trend is in your favor, right? I mean, the trend is tremendously in your favor overall. You do have some weakening indicators, but generally, this bounce here today, it's much stronger than most of the bounces out there in the market. And it's one that if I were in, I would basically just look at yesterday's low as my stopping point and say, all right, we break yesterday's low and I'm gone. Okay. And really, that's for a lot of these things, Chesapeake Energy, which I mentioned this morning. Now, where's your stop? It's yesterday's low. Nucor, downgraded this morning, and so after a little gap up, it broke yesterday's low and started to fall pretty fast. And as some of these break yesterday's lows, they will fall pretty quickly there. Okay. Very interesting divergence here with U.S. Steel and Nucor, and that has to do with the upgrade on one and the downgrade on the other. AKS, I was asked about AKS yesterday if I see another entry into AKS. AKS had this real nice move back here in December. Not yet. I still think it's a little early. I still think of these coal names, like the BTUs of the world, like the Walter Energies of the world. I think they're just still a little bit early. Even the copper, I'd almost rather buy FCX than mess around in some of the coal right here. FCX had some very nice volumes yesterday. Didn't get routed. It's kind of basing in between 35 and 36 here. FCX is one that I find to be incredibly enticing here to the upside, especially if it's able to hold on to this 35-20 area. That would be incredibly enticing there. All right, so we got the market bouncing up a little bit. We don't have, we have things that are green, we have things that are red. Nothing that I see opening up and surging. Even Google opened up and has been lagging. Apple opened and kind of been lagging. As far as opening up and surging, we got JBL. Let's take a look here at JBL here. This is one that gapped up. This had a little breakdown yesterday, gapping up. You're messing with kind of the gap here overall. Okay, and then probably Micron, as far as one of your better looking charts out there that is worth maybe going after right here. Other than that, I still think a little bit of patience will be rewarded. By patience, I mean heck into the close today. I don't think you have to be overly patient here in general. I think the VIX down as much as it is. I think that bodes pretty well. Would love to see things like Wells Fargo, or I'd be a lot more confident in being a buyer. Things like Wells Fargo and JP Morgan. I don't necessarily need them to go up here today, but as long as they don't get routed, as long as they don't get just crushed, that's what I want to see. I didn't mention Citigroup. I am looking at potentially buying some Citigroup ahead of earnings, but don't really have anything there just yet to really base off of. Alrighty. Sorry, just looking at my emails, making sure I got through all the stocks that everybody wanted to look at here. Yeah, Hershey. Didn't look at Hershey. Hershey here yesterday, was watching it. We're talking about a really nice setup. Some good volume on the bullish side here. It's been kind of like Johnson & Johnson, right? I mean, it kind of doing the exact same thing, and I look at them kind of the exact same way. Are they ready to move? I'm pretty comfortable that they're probably going higher, but are they ready to move? And so far, just doesn't quite look like they're there just yet. Okay, but should be there soon. Okay. All right, so as far as for the challenge, no challenge trade right here. May make one here in the next 35, 40 minutes as I go through and look at some of the stocks here. It wouldn't be a huge one, but it'd be something that I've talked about. I want to go price some of the TWC options as well. I think TWC could be a very nice one to get into there on the upside. But if we don't make one here in the next 30-35 minutes, we'll look at kind of into the close, getting into something, and probably breaking it down where we have about 3,600 on the challenge, breaking that down into two positions and marching forward here. Yeah, AGN. AGN here, you're talking about just one of these fantastic trends. I don't think you really get anything from the technicals. This becomes much more of a fundamental type of a play. This is really a fundamental type of move. But it's one that, if you're still riding it higher, you can just use something as simple as the 7. And continue to ride it there. I don't think that going flat necessarily says anything. You'll see something like the MACD starting to turn negative. Well, that's just a product of the momentum slowing, right? It's still going up, but the momentum slowing down is going to be reflected there in the MACD. Yeah, ADSK continues. It held up very well yesterday, didn't it? ADSK held up very well. And getting a nice little bounce here today as well. Bodes pretty well. Another group that's kind of I'd love to see snap back a little bit here as far as for an entry. Some of these Vegas stocks like Wynn, Vegas Sands. So far, not enough. But even something like Wynn holding up very much like ADSK, right? Still strong uptrend. Yeah, you got some bearish action yesterday as it rolled with the market, but holding on to the 7 here today. Wynn is a very interesting upside type play here. For the bulls. MGM kind of in a similar position there. Alrighty, well, thanks for hopping on. Any questions? Let me know, and we'll talk to you later. Take care.